Good afternoon. It's Tuesday, October 3rd, 2006. This is Brian Shannon speaking from Alpha Trends. And yesterday we had a pretty good little sell-off in the market, and I had suggested that it was probably more due to just some profit taking and hadn't really done any damage. Today we did get a recovery of the market, although it wasn't what I would consider really a full recovery. In other words, a recovery that's going to give me enough confidence to become more bullish again in here. And the reason for that is why I had pegged yesterday this level here at $40 and about 40 cents, saying that if we break, if we stay below that level, that's the area where there's danger. And now we've got that 5-day moving average, which is heading lower again. Now, on the positive note, or more neutral actually, we have these moving averages crisscrossing, which represents indecision. What I think is going to happen is probably we need to have a little bit more consolidation in this range to see if these higher lows are going to hold. And I wouldn't be surprised to see it pull back down towards about 40 and a dime tomorrow. Realistically, though, we've got to get and hold above really about $40.45, and we need to see that 5-day moving average flatten out before I become more confident in the bullishness of the market over the short term. Longer term, looking at the daily time frame, obviously we've still got a very nice, healthy uptrend. The market came down today, and am I not getting all the information here on my daily picture? It looks like the daily picture there. Here, looking at the 10-minute time frame. What the heck's going on here? We got a 5-minute picture. You can see we made a low down near about 39.90, but on my daily time frame, we're not seeing that. And what happened, and I don't know why that would be, but what happened was we did tag that 20-day moving average. So it appears like there's a little data problem. Let's see if it shows up in the spiders as well. The intraday low in the spiders was actually down near about 132.65, and looks like my information is good here on this chart. Today was an inside day there, and again, the market, the S&P 500, we had a little bit of a pullback below the 3350 level, and yesterday I had said that the market needed to get back and hold above 133.50. Now, it looked like it was doing that. That is until late in the day. And late in the day, we saw the market pull back from that 133.50 level. So it kind of puts us again in a more neutral area. Although you're looking at the 10-minute time frame, it looks a little bit better than the Qs. However, the market still is extended here, so we're up near these highs that have been projected off that inverted head and shoulder. So basically, my thesis doesn't change, which is basically, or my outlook doesn't change, which is we're still in a high-risk environment, and you have to be quick in this market to be able to lock in your profits and make money. The MDY, the mid-caps, as we know, recently found resistance at the 200-day moving average. Yesterday, I had suggested that it looked like they were headed for a test of the 50-day moving average. We got that test of the 50-day moving average today. We're still healthy because we've got higher lows in here, and the biggest area that I think is really going to spell trouble remains at 133.50. So that's nearly 3 points away. But again, just to remind you of what we're looking at here on the weekly time frame, this could potentially get ugly if it does break down below there. So we have to keep an eye on this area. The 10-minute chart, you can see that we had an attempted rally recovery, and the market failed late in the day. So I think we're probably going to head back down tomorrow, maybe towards that 136 level. No real danger yet. I would be more concerned if we take out this low here, and then obviously the bigger level at that 133.50. When I say this low, I'm talking about the low about 2 weeks ago, 134.5. And I gotta get out of the habit of saying this low or that low. I got an email from someone last week who's actually blind and is listens to this. So to make it easier for him and anyone else, I'm going to try to enunciate those levels a little bit more clearly. The semiconductor holders, SMH, as I had been pointing out, we've recently made a lower high on the daily time frame, and now it looks like this 10-day moving average, just if the market goes sideways tomorrow, I think the 10-day moving average is going to cross down through that 20-day moving average. That's what I officially consider to be indecision. That's what I consider to be this beginning of stage 3 distribution. And it doesn't mean the market will decline. It basically means that the market goes from a green light to a yellow light. Even though we have the 50-day moving average still advancing, and we're going to give the benefit of the doubt to the buyers. It just tells us to be a lot more cautious. And again, the 50-day moving average is down near this 33 level, which is also, these recent lows from about September 25th. It looks like we're headed towards that level. Again, on the 10-minute time frame, this market broke down. It tried to recover, and now it's got to get above 34 and a dime. For me to think that the buyers have regained control. So continue to be cautious. I'm looking at an hourly time frame right now, and it just kind of looks pretty ugly in here, and it looks like we're probably going to head towards that 33 level. We'll let the market be our lead us, here through what we should do. Basically, again, getting back above 34.10 and holding above that level puts that 33 level much less likely to occur, the way I see it. As far as the open positions, we've been short this boom, and I was suggesting that you maintain a wider stop because it's something that I wanted to hold a few days, and because I thought there was a significant potential breakdown, a potentially large breakdown coming for the stock. And the trend line I'm drawing in on the daily time frame, connecting the lows first from late May and then mid-July and then late here in September, was clearly broken today, and the market closed below there as well, near the lows, in fact. If we look at the weekly time frame, we can get a little bit more perspective on what it is that I've been looking at, and where I think the intensity of this breakdown comes down to about the $29 level, 28.5. Again, unless we get some kind of good bearish news on this stock and it gaps lower. But I think that we've got to start being a little bit more aggressive right now. Looking at a 5-minute time frame, I had suggested first getting short over here at 32.75 last Friday. We have subsequently lowered our stop to 33.15, 32.50, and then 32.50 today, which obviously was way up here. And realistically, maybe we could have put our stop there. Right now, worst case stop, I would say, goes right above this high right here at about 31.60. However, I think that on any further weakness down towards $30, you ought to cover half your position, and then on the other half, put your stop up at that 31.60 level, which would be a pretty nice gain. Hopefully, we can get a real nice gap lower, and if you get a gap lower of maybe $1 or more tomorrow, I would advise that you ought to cover the entire position into any such weakness if it were to materialize. Rambus is another stock we've been short since last Friday. We got short at 17.55. And we've been pretty conservative with our stops in here as well. Yesterday I suggested you lower your stop to 17.60 in Rambus. I'm still looking for about, I think my target was about $16.50 a share. And 16.25 was the low back from about September 22nd. And then you've got that 50-day moving average down near about $50 a share, $15 a share. As far as this one goes, I think you ought to set your stop probably just above today's highs, and let's say $17.15. So even if we get stopped out there, that'll provide a solid 40-cent gain. Hopefully it does that right away. A couple of stocks that we kind of missed was a CCJ, just a beautiful breakdown. I kept getting emails from someone saying, hey, Brian, you don't understand the fundamentals of this company. They're the only, they have a monopoly on uranium. Well, you know what? Technical analysis doesn't care about monopolies on uranium or anything else. Technical analysis is about money flows. If you know about that monopoly on uranium, so does the rest of the market. That's built in. It's factored into the price. The stock becomes over-owned, it distributes, and it declines. And that's the cyclical rhythm of the market. That's the way that stocks trade. And here the stock is really falling apart very nicely. A stock that we didn't get in yesterday but met the entry criteria today and really performed spectacularly was this Acorda Therapeutics, ACOR. And I got 2 emails from people who said they did participate based on the instructions from yesterday, which were first to get involved above $9.35 and then add to it above $10 a share as well. once in to raise the stop at $10.70. And here you can see the stock had a fantastic run here into the close, rallying $1.50 in the last 20 minutes or so. So if you're in this stock, it's attained the price target. So I would suggest that 11.5 was our price target. So I would suggest you sell at least half of your position up at this level, and you're going to have to use your own judgment as far as where a stop goes, because what I wouldn't suggest is putting a stop underneath the higher low, which is way down here at this level at 10.07. And when a stock runs this quickly like that, that's a great time to use the trailing stop feature that I know Realtek offers, because I use that sometimes, and a lot of other firms do as well. Okay, as far as the stocks mentioned last night, AUXL, we were going to buy this stock on why am I typing wrong? AUXL. AUXL, boy. We were going to buy this stock above $10.40. You can see where I drew that line in, that it did not get above 10.40, so no trade in there. EGHT, we were going to buy above $11.12. That trade did not occur either, so no trade there. Keep an eye on these for tomorrow, though. They might be the next ACOR. Power, PWER, we were going to look for a pullback to $7.10. We got that pullback to $10.07. And then the plan was to buy the stock above $7.26. Well, the stock didn't make it above $7.26. The high after that pullback was $7.24, so no trade in there. I think that above $7.25, this stock could probably be a good trade for tomorrow. UTSI, what the heck is wrong with my typing? UTSI, we were looking for it to get above $9 a share. That never occurred. No trade in there either. ANDE, we were looking for a rally and then to sell short some weakness. The rally never occurred. The stock broke down hard. CONR, this stock did meet our entries because we were looking to sell it short below 23.35. It did that initially, and our stop was going to then go at 23.62. We were stopped out with a 28-cent loss in CONR. And finally, DRQ, Dril-Quip, we were going to look for a rally in here and then sell it short on weakness. That never occurred either. So all in all, a lot of good plays. That ACOR was fantastic. Boom, obviously, is a nice trade, and Rambus. We've got a lot of other stocks that are setting up nice and moving very nicely, but maybe not according to the exact way that I lay out. So again, that's why I want to encourage you to make these ideas your own. Learn to recognize the good places to buy and sell based on not what happened at the end of the day and what I'm commenting on, but based on action as it folds in front of you. Can you still justify a good risk reward on that overall setup based on the current intraday action?